Yeah, record on the cloud. I'll download it and then upload it to YouTube.
Okay, sounds good.
Hey, Barry, can you do that with the team meeting from, or what did we do yesterday?
It's already been uploaded. MRED's uploaded already.
That's it. Thank you.
So guys, we just want this to be interactive, and we will, sorry, probably should have started it from the beginning. So if you have any questions during it, just kind of stop us and we will talk about it. And I enjoy talking about real life situations. So if you have something to share, go ahead. Just want to, and everybody understand what it means to be an independent contractor. Josh, do you know what that means? Like for you, you know, you're not a W-2 employee. And at the end of this year, okay, by January 30th, we will be sending you a 1099, okay? And so it's your responsibility, it's your responsibility to pay taxes on your profit in your business, okay?
So real life examples of stuff, you can see these are my quarterly tax payments that I'm currently making out checks for. So that's what being an independent contractor means.
Fun. Responsibilities as a business owner. So, you know, one thing that you do need to keep track of is any vendor that you pay over $600 in a year, you're responsible for sending them a 1099 unless they're a corporation. So for instance, if you use a certain photographer on all of your listings, you're more than likely going to end up spending more than $600 a year. So what I do is get a copy, always request a 1099. And I always do that before I reach the 600 because sometimes it's hard to chase down after. And then, you know, you will have to record that in your whatever system you're using for your books. And then by January the following year, you have to send them a 1099. Does everybody understand that? Okay. Mm-hmm. Now, when you're booking your income, this is, some of you haven't been here, but yet a full year, what your 1099 is going to look like is it's going to be the gross income. So for instance, let's just say you made $6,000 on a commission, yet your check was only $4,000, your 1099 is going to be the $6,000, okay? And so what you have to do is understand that your company dollar and your royalty would be booked as cost of goods sold, okay? So you got to keep track of what you paid in for company dollar in royalty. And then that is, you know, your net income, and that, you know, of course you got to take out expenses. So we'll get to that in a second. Make sense, guys? Mm-hmm. And anybody use QuickBooks, or are we manually using it on an Excel spreadsheet? When you totally can, that's totally legit. If you want to, anybody want to share what they're currently using?
So I do use a Google spreadsheet to keep track of all expenses. And I have that spreadsheet set up to where I have my profit and loss on the first one, and I can share this with whoever wants it. I actually have a blank copy that I made specifically for sharing with other agents. So the first one is a business budget that then will track, there's formulas in there that link to all the other spreadsheets. And it basically will show you what percentage of your GCI all of your things are. So you can see your P&L at a snapshot. And then it's set up according to the Millionaire Real Estate Agent chart of accounts. So that's what I'm currently using because, you know, like here's an example. When I go out and get gas for my vehicle and the thing doesn't print me a receipt, it is one of my biggest pet peeves in life. So I refuse to go into the gas station to get a receipt. So then I'll just like log on to my Google Sheet and record the amount right there. So that's why I like doing it on a Google Sheet, because you can access it from anywhere.
Ginger, I use an app called Shoeboxed. It's one word. I love it because it does two things for me. I can scan any receipt and then it gives me classification on it. And then when I'm on the website at shoebox.com, I can print reports by month or by year. And at the end of the year, I just print that report off and it shows expenses by category. And it also tracks my mileage. So back before I had a company car, I would hit start when I was ready for it to track mileage, and I would hit end when I was done. It gave me a comment box, and I would just write showing at 123 Main Street, and it would track that mileage for me. And it was just very, very simple. It's $5 a month. So
Oh,
it's
wow. That's awesome.
good program.
And is it an app, or can you access it from the computer too?
Both, yes. It's an app and online, and it's shoeboxed.com.
That's awesome. That's so reasonable.
Yep.
Okay, people are chatting, so I'm kind of. Timko, are you able to read those? Everybody.
What I'm gonna do is, I'll keep track of the chat box. So for those of you who want the spreadsheet that I referenced, I just put my email in the chat box. Please send me an email. So my email inbox is my to-do list. So just send me an email saying, hey, I want that spreadsheet, and I'll send it to you.
Okay. So the thing I would suggest right away, if you haven't already, is go open 2 separate bank accounts, one for checking and run all of your expenses through there. And yeah, you might need to fund it for the first time if you don't have any money. Maybe you transfer, $500 into that, keep track of it. And then I would highly recommend, because you don't want to commingle in your private account. That makes it a lot harder. And then also the savings account is, after each closing, you want to move over approximately 20-25% into that account. So, and don't spend it, because at the end of that quarter, you're going to need to send in your quarterly tax return. And we'll talk about that in a minute. Everybody have separate bank accounts? Yep.
Yep.
Can't believe I'm going to say this, but no.
Okay. Pam? Oh, get what? Bank of America, and it doesn't even if you're not running your business, through an entity, it's still good to run everything through a separate account. Okay. It's so much easier to track expenses and stuff.
I have an appointment to do it, so.
Okay, good. And then we're going to talk about what can you write off. Okay. So
Ginger?
Yeah.
If you have other things to talk about, Mike covers this next.
We'll talk about write-offs and okay. The only thing I want to say on the client gifts, we're limited at $25. However, if you can give a branded gift like Cutco knives, they're $125 each, but they're branded with your logo, and that's 100% deductible. Okay. Just so you know that.
Brand everything.
Yeah, that's how you get around that $25.
I'm just saying, for those that are new, brand everything.
Yeah.
But be careful, because you always want to lead with revenue. So don't go out and brand everything if you don't have the money to do it.
Yeah, absolutely.
Yeah. And then if you have to, like if you're going to go buy them $100 or $75, put their dog's name on there, like that's a person. To me anyway. Some people it's.
And I'm also going to throw this in there. We used to do gifts for every closing, and we actually stopped about a year and a half ago, Shannon. So we got branded cutting boards, and we ordered them in bulk, and they were like $16 a piece. But when they ran out, we didn't ever order new ones. We have not been doing gifts for about a year and a half now, and my business has doubled. So don't think that you have to give a gift.
Yeah.
The best gift is amazing customer service, and the business will just keep coming back to you. Just a thank you card is enough, guys.
It really is.
I like the handwritten thank you cards, you know? Yeah, it's really, really nice. I've never given closing gifts probably in the last 15 or 20, probably about 20, 25 years. My first year I did all over the place, and I agree with Erica, 100%.
Well, and we need to talk about, just so you guys know, you can never pay for referrals. So, you got to kind of be careful on what you do for referrals. I do like to give them a little something, because I want to, teach them, give me more referrals. So just think about that. the Illinois laws, we really can't give anything for referrals. So you certainly can't pay for those either. I mean, you can, as long as they're licensed, okay? The only thing I would say about is create a system that works for you, okay? So whatever that is, it doesn't matter. If you want to keep a binder in your car and put receipts in there, just know that the heat and the light will fade those and they won't be legible. So here's what I do. And the second I spend that money, like Erica, if they didn't spit me out a gas receipt, I just take a picture of the gas thing and email it to myself. And I have a file in my inbox says receipts, and I just move them all over because I don't really want to print them and have to go file them. I just wait until I start, you know, at the end of the month, I start keying in all my expenses. I print them, put them with the statement, and that's my system. But everybody's different, you know. I'm really bad at losing receipts. And then we got Jeb and our driver, everybody's, you know, all using business accounts, and this is just what works for us. So
I just have one of those accordion files that's labeled January through December, and I keep receipts in in a certain pocket in my wallet, and then maybe once a week I'll take them out, I'll enter them into my spreadsheet, and then I'll put them in the appropriate month so that I have them.
yeah,
Just so you guys
An
know.
envelope.
Yeah, so like, or you can do it's like an envelope in your car, and every once in a while you can take it out and enter it in.
I usually do mine like towards the end of the month or beginning of the month, depending on, you know, whatever. So if I have the envelope in my car, I use a manila envelope as opposed to a white, you know, like a regular letter envelope. I have like a 7x5, you know, where you can not seal it, but twist it and it closes. Cause I've done that before, dropped my whole receipt envelope all over the place. So I keep like a 7x5 envelope, and then once a month I just go and I take a picture like Ginger, convert it, and throw it in a file.
yeah.
I mean, there's
Well,
a bunch of different ways you could do it for sure.
Yeah,
One
and like,
question that I've always gotten asked is, do credit card statements count as receipts? And they do not. You
Nope.
actually have to have the receipt. A credit card statement won't count.
yes, that is correct. Now, a gas credit card, if you only use for gas, that does work because they will break it down where you were, how many gallons you got. So we do use that, but it has to be a specific gas card. So my suggestion would be is that at least once a month, you sit down at the end of the month and you enter all your expenses and then all your income and run your profit and loss. So for instance, you take your gross commission minus your cost of goods sold, which is what? Anybody tell me what cost of goods sold is?
Your splits and your royalty.
Say it again, Alicia.
I'm sorry, your splits and your royalty?
Correct. So you take your gross income minus your cost of goods sold minus your expenses, and that's your net profit for the month. And then you take a percentage of that, whatever tax rate you're at, and you move that over to your savings account and make sure you have enough in there. And okay.
Let me expand on that a little bit, Ginger.
Yeah.
Cost of sales is anything that costs you money because of a sale. That's literally the best way to think about it. So you're not going to pay royalty if you don't have a sale. Think of it that way. So your royalty, your splits with the office. Also, if you split that money with a buyer's agent, because if you didn't have the sale, you wouldn't pay the buyer's agent. And same thing with a referral. If I get a referral from an agent, that 25% I pay out is because I had a sale. So that all falls into that cost of sales.
Yep. That's good. And then the only thing I would definitely recommend you guys is always know the source of your income. Like always know where that business went. And I mean, I do keep that. I have a Google sheet and every single closing I have is on there and I know where that lead came from. You know, if it came from a personal referral, if it came from, you know, flyers or open house, like I know, because if you do go out and you decide to spend money, you want to know that you're getting your return on that investment. Okay, so I would definitely make sure you're tracking every sale of where that, and you can do that in command even, you know. whenever I put a contact in command, I always put where they came from. I like tag it. Okay, I'm not going to cover this because Mike's going to cover this, talking about entities and if you should have one, what the tax benefits. So he's going to cover that in the next at 12 o'clock. And then here's our slide that talks, you know, Erica mentioned this a minute ago, to always lead with revenue. Set a budget and stick to it. And then I will tell you, I'm kind of bad about that. Like I do that at home, but I'd have to say that I'm kind of bad about doing a budget for my business. And, you know, realtors, we just, you know, we get exposed to so many shiny objects, and it's so easy when you go to like an event and all these vendors are out there. It's easy just to overspend, or you sign up for something and you never use it. Like, you know, 6 months later, you'll be looking at your credit card if you're not doing it monthly and go, what is that? And then you remember you signed up for it at an event and never used the system. So that's one reason you want to really look at your, you know, maybe your debit card or and just know what you're spending your money on. So we talked about sending IRS quarterly payments. And so January through March, your quarterly payments are due in April 15th. So here's kind of the list. And then if you've never sent that in the memo of the check, you always put 1040, and then you put the year, and then you could put quarterly payment, but you always have to put your Social Security or whoever's the main, like if you're a female and you're married, you put your husband's in the memo. Okay, everybody clear on that?
I would also suggest, if you're not doing it electronically, which I do, I don't know if anybody does this, but I do mine electronically. So I get an automatic receipt that I paid it. But if you are going to do a paper check, I was taught to always make a copy of the check itself, because they'll ask you for it. If you have to dispute that they didn't get your payment, they will ask you for a copy of your check, and that'll save some time getting it from the bank.
Yeah, that's good advice. Okay. So one thing that I just want to tell you, an exercise that I did with our team a few years back, was just to really think about your ideal client. Who is your ideal client? What location did they purchase or sell in? Is it a buyer? Is it a seller? What price range? And do you have a niche that you want to work? Like maybe you want farm and land, or maybe you only want golf course communities. I mean, to really think about that, because it kind of helps. I mean, I know that Anita did that once on years ago, and it really changed her business because she stopped working some of the lower end, and that's your choice. I mean, it's your business. You run it how you want. If you only want to sell $200,000 houses or more, then that's your decision. You get to make that, okay? But I do think that's a powerful exercise to really know what they call an avatar, you know, to really know who your ideal client is. And I would just also say, be willing to walk away, because if they're a jerk the first time you meet them, they're going to be a jerk through the whole deal, okay? And it's just not worth it. Right, Timko?
Had my deal on Wednesday not closed, I would have terminated the listing contract and told him to go kick rocks.
Yeah.
Guys,
I remember the first, sorry,
and that's
Erica.
the thing, like, to make sure, like, you know, there are agents out there, like I used to do it myself. I used to take people regardless of the red flags because I was living paycheck to paycheck. And now we are doing enough steady business because we're doing the activities that we're supposed to be doing to get repeat business. So now, like, I can afford to say, peace out, homie. Like, I'm not dealing with your shit. So that's why it's important to run your business like a business. Sorry. So that you run your business like a business and you have the ability to go, I'm worth more than this. To not have to take, I literally had a listing appointment. They told me if I was willing to do a total of 2% commission, they would sign with me.
Oh, goodness.
How am I supposed to pay anybody, a buyer's agent? So at that point, I'm like, see, I think you should find somebody else. So making sure that you're making decisions that are good for your mental health too.
Yeah.
Plus two, I love that, Erica. And plus two, think of this. If you have a difficult client and you see a red flag, first of all, I know when I fired my first client, I was like, yeah, because
It's empowering, isn't it?
oh my God, it's so empowering. It's unbelievable. And I was broke. I mean, I was single. It's terrible. But that said, also what I learned in that moment was that I was able to go work with 4 other clients that were good clients. And I made more money, saying peace out, homie, really, to people who, were going to suck my time up and not be cooperative in the sale, in any way. So think of that too. Your time is super, super valuable.
Totally. So, oops, sorry, I went to the wrong. Okay, guys. So usually around October, we start having business planning classes. So we're only a few months away from that. Goodness, this year's going by fast. So I would just say if you don't have a business plan right now for the rest of this year, I would just sit down with someone on the leadership team, like set an appointment and really sit down and just have a plan to finish out this year. And then in October or November, right around, we'll have a business planning class for the following year. Okay. So, and then in that business planning, we'll talk about where are your leads going to come from? Do you need to add a source this year? Things like that. Anything you want to add there, Erica?
Gary Keller says that in order to hit, so for example, in order for me to hit my 2021 goals, I need to have 15% of my 2021 goals under contract by January 15th. So I can't possibly do that if I'm not looking ahead 3 months. So that's why we business plan in October, so that we know what we need to do October, November, December to have a successful first quarter to be on track to hit our goals for the year.
Yeah, and then the only other thing I would say is just make sure that you enter your goals in Command. It's really powerful because it literally will track your progress for you on every DA you get paid on. So if you haven't done that, that's super easy to do. And one of us, you can get with Kate and she can walk you through it. And then I would just say, this is kind of important to me, is just like really understand your strengths. And honestly, one of my strengths that I have realized is I'm a really great problem solver. I figure out stuff. Like I just had a deal falling apart last night and I think I'm going to be able to save it, but it's a win for the seller and it's a win for my buyer. So I think it's, if you can become a great problem solver in real estate, the money is kind of endless, really. What do you think about that, Erica?
Yeah, I agree. I think that is one of the things that I think is most important. And when I talk to people who are thinking about getting into real estate, I tell them like common sense and problem solving are the two things, because I mean, this wacko deal that closed on Wednesday, that's about what it was. It was, how can we come to win-wins and how can we figure this out and fix things? So that's what it takes is just grit and problem solving skills.
And keeping a cool head too, because, okay, I'll just give you an example. This has really happened sorry, my dog. He's going to be barking. Somebody's walking down the street. I was just going to tell you about a situation that happened the other day. So Amanda Edwards had one of my listings under contract. And the day of the walkthrough, which was less than 24 hours prior to our closing, she goes in there with her buyer and there is water pouring in the basement, like literally pouring. We had that really bad rain. And the thing I have to say about Amanda is she kept her cool in front of those clients, which is important because the minute you start freaking out, then they start freaking out and then we're done, right? But she kept her cool and she called us and Jeb, of course, runs right over there to look, and that's something you would need to do is go check it out. And then we were able to get a contractor in there and give us a bid, and we closed the very next day on time. Everybody's happy and got it done. Like, and the seller, they were a for sale by owner, and they were just like, that would have never happened had we not had you guys. You know, deal would have fell apart. I'm like, absolutely would have, you know. So I just think, you know, thinking outside the box and just also following through, because some things do go past closing. You don't really want them to, but we got everything on the HUD. Everything got done. Buyers were so happy, and they got the house and they got to move in. Timko, I'm going to let you do this one so I can mute myself.
All right. So setting your schedule. I mean, we all know that what's the bold law? If it's not on your schedule, it doesn't exist. And I love how Ginger gives this to me because I am like the worst at this. Put your date nights in your calendar first. So Gary Keller says he sits down with the 2021 calendar and he will go through and put all of his vacation on the calendar first. So you have to, if you don't make time for yourself, your calendar will run you. And it is okay to say, like, I just had clients text me, can we go see this house today? Nope, I'm sorry, I'm booked up, but I can go tomorrow morning at 9 a.m. And it's okay to tell them that. And before, you know, years ago, I would have been the first one to be like, yes, how do I rearrange my schedule to, like, you know, drop my nephew off, and I know we were supposed to get dinner with my brother and his family, but I can just run and do the showing, and if I'm a little bit late, it's not a big deal. And then, of course, the showing would run late, or I would hit traffic or something, and it would be a disaster. So put yourself and your family first, because they're the ones that really matter. And if you start putting your family and your mental health and your personal time as a backseat to your clients, I mean, what you're teaching people how to treat you. And if you're treating your family like that, like usually, and it happens so often in real estate that our families are the ones to suffer because we think, well, they'll understand. And yes, they will understand to a certain extent. You know, and Cody Gibson is an OP of a couple market centers, and just a really awesome guy in KW. And he tells the story really well. He relates it to juggling, right? Like, we all have balls that we're going to juggle. And some of those balls are rubber and some of those balls are glass. And while we're juggling these balls, if the rubber ones drop, they'll bounce back, right? Like, you know, like if you have a deal fall through, that rubber ball will drop, but then you'll find those buyers a new house, or you'll find your sellers a new buyer. That ball will bounce back. If you drop the glass ball, that is your health, that might not come back. Or if you drop a glass ball, that is your relationship with your spouse, that might not come back. So chances are it'll fall. And even if it drops and it just gets a little nick out of it, enough nicks will cause it to fracture, and enough fractures will cause it to break. And so that's, I think, a really good analogy that we can all keep in our minds, that make sure when you're juggling, you're keeping the glass balls in your life very protected.
I agree. And please, please, please have a shut off of your schedule, like your day. Put your phone away, and don't be that agent that texts me at 9:30 on a Sunday night and gives me a deadline of an hour on our offer. Please, like, I have a life. And, you know, I do think you need to respect that, you know, of other agents and their work schedule. So if you're submitting an offer on a Sunday, I would just text them, find out when they would be able to work that, you know. Rick, do you have anything to add to that? Is he still on?
Yep, I sure am. No, I thought that was very well said.
Yeah. I just really, you know, I just think we have to be respectful of each other, you know. Even if you're a night owl, I'm not. I get up early in the morning, 5 a.m., but don't text me late at night, because I'm not going to respond.
You know, Ginger, I do have a comment to make on that.
Yeah.
And I think, you know, as we, I guess, onboard younger generations, et cetera, there are tendencies to want to text anyway. And I really do recommend that we avoid that kind of conversation when you can, and have a verbal conversation. Pick up the phone and talk to the co-op agent. There's so much miscommunication that can happen in a text message. You really don't understand what the tone of the text message is like. So I know that's kind of what we do in today's environment, but I really encourage you, pick up the phone, have open and honest dialogue with whoever you're talking to.
Oh, that's really good, Rick. Yes. And I just think we should all, I mean, like you guys can have your own policies, but one of mine is I never want to deliver bad news unless it's in person or on the phone. Like delivering bad news via text is not a good business practice, you know, because you just can't hear their tone and how upset they are. And, you know, and then sometimes a text message can be read 5 different ways. So I just think it's really good to do that. You know, it can't always be in person, but at least with a phone conversation.
Could I add one more thing?
Yeah.
You know, when you're texting too, and I know I'm like you, Ginger. I go to bed early and I go to bed early and I get up early. So I'm 4:30, 5 o'clock in the morning. But, and that's when I start my day. But I think when I don't need something emergency, I don't tend to text. Like if I need something done I said, hey, Ginger, first thing tomorrow, could you? I would send you an email and put it as a high status as opposed to sending you a text, because most of us still have our phones on, and that text, you know, even though it's not urgent, we have an automatic, in the life we're living now, an automatic need to look at it, you know. So that's my practice is if it's not emergency, I do an email. If it's something I need right away, I will call. And if it's something that needs to be done before someone, you know, puts their head down on the pillow, then I'd say, hey, this is urgent, you know, not 911, but it's urgent. Could you do this today?
Yeah.
And that way, if you put out the expectation of what my message is about, what I really need from you, then that person can make that, you know, judgment at the moment and take care of it appropriately with their schedule.
I agree. Awesome. Thanks for sharing. I just want to kind of talk to you guys like a morning routine and just like really have a set schedule. Like I know my husband's really good. He's way better than me. He's so disciplined. He gets up in the morning and he reads like the Bible, you know, and he likes it when I'm still asleep. So he has privacy out here in the living room, drinks himself a little cup of coffee, you know, meditates, gets his workout in, and then he's ready to go, you know, after that. So I would just say, if, you know, being an independent contractor, you don't really have a boss. You kind of have to control yourself. And that is hard to do sometimes. So, you know, I just feel like if you're not out showing, you should be working. I mean, if that's during your work schedule, okay? But you've got to have a work schedule to know. And like some people prefer to take every Wednesday off, and some people prefer to take every Sunday off. I think that's really great to have a set, you know, schedule if you can, you know? So anyway, just anything you want to add, Timko, on that?
No, I agree with all of that. And everybody's different. Like, I wish that's what my morning looks like, and it used to until I met my husband, but you know, it is what it is. So
You have a youngin too.
oh, but that's not an excuse. Everybody said I should milk it, but good Lord, the child sleeps from 9 p.m. to 10 a.m. So I don't have an excuse.
Well, there you go.
Lazy.
Well, and we just talked about, like, if you're new in the business, some of the best practices to get in is just do your practice scripts and role play every day. And it's really beneficial if you have a different partner every day, because you learn something from that other person. So and then when you do that, just go straight into it. Like, you know, if you had a schedule, like if Timko and I had scheduled today at 8 a.m., when she calls me, she goes straight into that script and role play. Like, we don't sit and talk for 15 minutes. Like, let's go. And then that way it's not taking a whole lot of your time and then the next day do with somebody else. So I think that's a really great exercise until you really have internalized those scripts. And then also lead generation daily, you know, especially when you just start, you know, you're just trying to get into these constant routines and that you can carry on throughout. And then, you know, it doesn't hurt to like preview homes too, especially if they're vacant. And let's just say you want to work a niche, you know, go out and preview some of those, really start to understand the market. And then I highly recommend, if you're not busy out showing, you should be doing at least 2 open houses a week. And that's because that right there is lead generation, and that's going to get you buyers that you can work with who might have a listing that they need to sell. Okay, and then I would just say show up as a professional. Like if you come into the office, and you're dressed and ready to go, you just never know when a lead's going to come in and they need to go right now and you're ready. You show up in sweats, you're not going to get that. Somebody else, it's going to go to somebody else. So I would just say really get dressed every morning as if you're going to a 9-to-5 job and be ready to go. Wear your name badge anytime you go to the store, grocery store, and be present, and it may be not physically in the office, but it sounds like a lot of you guys are showing up to these classes, and that's awesome. I love that.
Ginger, I'd like to add something to that if you don't mind.
Yeah, of course.
And this has come up a couple of times with other agents and other services that I've worked with over the last couple of weeks. And I'm throwing this out as a discussion topic for all of us if we've got just a minute. And it's that act professional. It's we are in a relationship business, and we are in the business of building relationships. Simple please and thank you and be appreciative goes so far. Being polite on the phone goes so far in life. Being pleasant on the phone goes so far. I got a call from another business the other day, and it went something like this. I answered the phone. This is Barry Schulhofer. Can I help you? Yeah. I need not an introduction of the self, nothing. And at the end, I'm like, is there anything else I can help you with? Nope. Click. That was it. Hung up. So I'm not going to be using that provider anymore, simply because if that's how he's going to treat me, how's he going to treat a customer? And, my reputation relies on him. And that's not going to happen again. So I just throw it out. Remember the pleases and the thank yous, and to be pleasant with people. Be yourself, but be pleasant. I don't care if they make you mad. I'm sure that Erica Timko had a hard time saying thank you and please the other night when she's talking to the St. Clair County Sheriff's Department, but please and thank you probably.
I knew who my seller was.
And I just bring that up as a discussion topic. Have you seen that? Have you seen the impact that has?
Yeah.
Mm-hmm.
Well, and as a listing agent, you want people to bring you offers. So if you're a rear end to work with, I mean, honestly, it's kind of hard. It's like, oh goodness.
Mm-hmm.
You want people to look forward to working with you, so I would just say that. Okay. This is something that we really need to talk about, because trademark law. So guys, I know that social media is everywhere and we're all posting stuff. I would just say be super, super careful of the images you take from online. They could be trademarked and you could be violating a trademark law. So you can pay for images. Anything you get from Keller Williams, you're free to use, right? But I know of a couple of agents that have gotten themselves in trouble by actually one time I got contacted by this company that said I used this ugly little image, okay, like this. I wouldn't even have used it, but I had a membership with this website, and on the automatic drip that they had set up, this little image was on all of those. So I was able to get out of that because, that was their system. But I'm just saying, just really watch what images you're using, that it's not someone else owns those, because I'm trying to think of where I get my images from. Like if I'm going to do some kind of ad or something, you can go buy them online. I'm trying to think, can y'all think of a company right now? I forgot what the name of it was, but anyway, I recently did it because I wanted my email signature to have the arch in it. So I went out and purchased that image so that I could use it. Instead of just going out, finding it and using it, no, I purchased it. It was like 15 bucks. So just want you to know that. And then the only thing I don't want to end with this, but I just want you to know that 87% failure rate in new agents in their first 5 years. And, you know, we're here to help. Everybody at that office is here to love on you and help you. So please, if you're struggling, I just want you to reach out, you know, just reach out, because we all have things going on in our lives, and, you know, maybe something's not going well. Just reach out, because we're here for you. Erica, you got anything?
No, same. Anytime anybody needs anything, let me know. Pam, I messaged you in the chat box. Send me your email, please. But yeah, no, I think that this is just like obviously a basic overview. The next hour is going to be really more specific about tax law. I personally use Mike, who's going to be next. I highly recommend just starting out with good habits. You know, start out, it's really hard to take that commission check and, you know, divide it into a savings account and a tax account. But, you know, most agents that first year, they don't. And luckily taxes are due in the spring, and the spring market's hot, so you can pay them.
Yeah.
You know, but make sure you start out with good habits, with a good accountant, with good programs and systems, because that's what will allow you to be more successful faster, is by already having that stuff in place.
Yeah, for sure. Anybody else y'all want to talk about anything that we covered, or do you have anything going on right now that you want to talk about?
Oh, I did have a question.
Yes.
So, with your, what do you call them? Like TCs?
Yeah.
So if you have one, a personal one that's not actually a real estate agent or in an office, now, how is the 1099 provided? Is that provided from, I guess, us as an independent contractor to give them, or is it something that Keller Williams will be given?
No, so if it's a deduction on your commission, is that what you're doing, like a deduction?
So it would be, I guess so, because normally with the buy agreement, it would be your percentage plus like an admin fee.
Mm-hmm.
Now, and I figured it was addition to, so I didn't know if that was something that would be, that will, I guess 1099 be provided by me as my company, or as Keller Williams will be sending.
You would, Erica. You would.
Okay.
So you'll track that gross income, and then any deductions that come out of that, you will be responsible for sending the 1099s to those people.
Okay.
Okay. Yeah. So you want to definitely track your gross, and then anything that's coming out of that check. And I know that can be confusing, but just want to make sure that everybody is tracking it that way. And I also use Mike. Mike is really great, and he's really great with questions. Like if I'm going to buy a new vehicle, you know, I will reach out to my CPA prior to and just make sure that I do it properly. So we buy our vehicles through our business. And so with mileage, you can do so many different ways with your automobile. But whatever you do, you have to keep a mileage log, okay, regardless. Because like my business owns our vehicles, and at the end of the year, I have to tell them what percentage did I use that vehicle for my personal, okay? And then I'm taxed on that. So anyway, I'm just saying on automobiles, you can either just do, and then the good thing about, you know, my business owning the auto is they pay, you know, any notes. All of the maintenance is covered through the business, and then all the gas is covered through the business.
And
So,
depreciation.
and depreciation. There was,
yes, don't forget that.
well, one year they were having this like special thing. I think it was last year when Jeb bought the Yukon. That was 100% depreciated in that year. And I was like, that's good because we made a lot of money that year and I wanted all that, you know? So you just really have to like, I mean, consult somebody before you go out and do something, you know, that big is what I would say. And then definitely keep your mileage log, guys. And you got to say where you went, why. Like you could say showing property to so-and-so, and then just track those addresses. And then
That's the way I used to do mine. I know Rick mentioned like pressing the button in the app and then finishing it. I am too scattered to do that. So I just put everything business related on my calendar. And at the end of the week, I would go back and Google Map to and from everywhere I went and then put that mileage.
yeah. If you're using showing time with the whole map thing, you know, that would probably work too. You could just plug that in.
I use an app called Mile IQ. And
Mile.
Mile IQ tracks mileage, uses the GPS on the phone, tracks mileage wherever you go, and then you categorize it business or personal.
That's cool. And how much is that a month, or is it free?
I think I pay $10 a month or something like that for it. There is a free version, but I think I pay $10 a month for an enhanced version.
Gotcha.
Hey, Barry. Hey, Ryan here. So if you guys also have Outlook 365, or I'm sorry, Office 365, Miles IQ comes with that. So you get Outlook 365 is a really good deal. It's $15 a month.
Maybe that's what I bought.
Yeah, you get Miles IQ. I mean, you get all the Microsoft Word, suite, and then you also get a terabyte of cloud space as well. So it's a pretty sweet deal for $15 a month.
Yeah, not bad.
And Mile IQ is the bomb. Just gonna tell you.
By the way, I mean, I feel like I've done everything in this world because I was audited by Microsoft once. I'm not joking. They will, yeah, I had to provide them all the receipts, all the serial numbers on all of our computers because they will come and audit you sometimes. So I think that 365 might be a good idea and just pay them monthly, you know? I mean, of course, I was legit. I did buy all those. I didn't copy them off somebody else's computer. Anybody else? Are we good? Any other questions? Comments? Is there anything we didn't cover about owning a business? Okay. So if you decide to create an entity, I just want to say this one part. If you choose to run your commissions through an entity, it can only be you in that entity, or if you're married, it can be, and they're licensed, that only if they're licensed can they also be in that entity, okay? Does that make sense? That's Illinois license law. I'm not sure. I think Mike just jumped on. Hey, Mike. He's muted.
Can you
There
hear
you
me?
go. Yeah, there you are.
How you doing?
Good. How are you?
Living the dream. In the life of COVID, living the dream.
Absolutely.
Yeah. So how's things going for you?
Really good. Yeah, things are busy, busy.
Oh, that's good. The residential market is really, really strong.
Hey, do you have a slideshow or anything, or no?
Nope. I'm just
Okay.
going to talk. Just
Awesome.
me.
All right, well, we just finished up, so if you want to get started, you can.
And you wanted me to talk about business and everything else, right?
Yeah, the one thing I didn't cover, Mike, was just, when to open an entity, what the benefits of that would be. I just kind of left that for you, okay?
Okay.
Yeah.
And then
All right.
another thing, Mike, is like what you can and cannot deduct on taxes as a realtor.
Got it. Got the 101
Make him the
deductions here.
host. If you're popping off, make him the host.
Oh.
Yeah.
All right, bye everybody. I have to pop off too.
Bye.
Thank you, Erica.
All right, if anybody has any questions as we go, feel free to speak up because you know, I don't want to just talk and then an hour later you guys forget your question. But I would go as long as you guys want me to go about tax. Even though your broker is Keller Williams, you guys are really in business for yourself, and you need to treat your business as a business and not what a lot of realtors will do is they'll treat their bank account as one account with their personal stuff, and they just spend as the money comes in. So you really need to understand that you are a business and you need to run your real estate side as a business. And by doing that, I recommend, if you don't have this already, is a separate bank account, one for just your business transactions. So your commissions come into it and your expenses come out of it. And then if you need money for personal groceries or other things, you move that over to your personal side and you pay for those things out of there. Keep an account strictly for business. Now, one reason we want you to understand your business is because you need to really keep track as you become a really high level agent. You want to be able to keep track of expenses because you want to know if you are spending too much in advertising or if you're spending too much in gifts or meals or where your money's going, because you know Keller Williams has a really good MAPS program that really gets you on track on you should be spending 5% or 10% in these types of categories. So we want you to keep track of those types of things. Plus, it allows you guys to understand where your money's going. Let's talk about advertising for one thing. Is my advertising really working for me? Well, if you don't track it and understand how much money you're spending in advertising, then you're not getting the benefit because you want to know what your return on investment is. So you really need to keep track of your numbers. And the way to do that is understanding what types of deductions, how to set up your books, and how to keep track of things. So for new business owners, I always tell them that you need to keep receipts. A credit card statement and a bank statement is not a receipt. So if you're ever audited by the IRS, they're going to ask you for receipts. And these receipts, if you do not have them, they can disallow the deduction. So for example, if you go to Walmart and you're buying some office supplies and you don't have a Walmart receipt and you just show it on your credit card as Walmart, they're going to play devil's advocate and say, well, what'd you buy at Walmart? Was it personal? Was it business? And if you don't have a receipt, you won't be able to tell them that. The other area that you really need to keep receipts is your meals, business meals with clients. If you take them out to dinner, or if you're going to get a cup of coffee with them or something along those lines, you need to keep those receipts. And on those receipts, you need to write a property address or a person's name on who you were with, because that will give proof to the auditor that you were with somebody, okay? And that is one of the main areas for realtors that they really audit is your meals, okay? There's 4 categories overall, and I'll get into more deductions, but since I'm on this right away, there's 4 categories overall that the IRS really focuses on in real estate. It's your advertising, gifts, meals, and your auto expenses or your mileage. If you have those 4 categories locked down, whether you have all the receipts, you have it all totaled up, you have it all nice and neat. If you're doing mileage, you have a mileage book. If you have those areas locked down, those are the areas where the IRS thinks that real estate agents abuse the tax law, okay? Mileage. A lot of people ask me, well, what if I own a car? What if I lease a car? Or how do I do mileage? There's no cookie cutter answer here. You do it the way that works for you. Some people lease cars and deduct the lease. Some people will just drive a lot of miles and then they do the mileage method. Some people if you're incorporated, they'll maybe buy the car through their company and deduct the car through their company. So those are different ways of doing it. And people ask me, well, how do I keep a mileage log? There's different ways of going about that. You can do Mile IQ or any mileage app on your phone. Some people will print the listing page that you go when you go to the real estate, and they'll just keep a folder, a box of those all year long, so they can pull out and say, here's how many houses I went to and here's all the mileage. Some people just keep a notebook. I drove so many miles today, and it was all business, you know. So there's no right or wrong. Just if you're audited, you have to be able to prove the amount of miles that you are driving. The way they do it is they're going to ask you for a picture of your mileage odometer on your car at the beginning of the year or the end of the year. Some people will go to their mechanic and get a receipt for their oil changes at the beginning of the year and the end of the year because it'll show their mileage on there. That's what they're going to ask you in an audit, okay? Because they're going to make sure you're somewhere in between there. Client gifts. Gifts, the technical letter of the law says you're only allowed to do $25 per person. But focus on my words there, it's per person. So if you sell a house with family of 4, well, now you can do $100 or so, okay? The IRS also realizes if you sell $1 million house, you're not giving someone a $50 gift, okay? They're looking for, if you sell a $10,000 house and you're giving someone $500 as a gift, well, that's abusing the system there, okay? The other thing too is if you do gift baskets, take a picture of one of the gift baskets that you do so you can prove what's in there if you're ever audited. Just one. But the other thing is, if you do some sort of advertising, some people I know have done a knife set with their name on it. Some people have done some other promotional items with their names on it. Well, that's not a gift at that point. That is advertising, okay? So that doesn't count as part of your $25 gift. You're promoting yourself, you're advertising yourself. So it's all how you put together whatever you guys do. I know a lot of people just do gift cards, and that's fine. And some people don't do gifts at all, but that's up to you guys on what you do, but that is the letter of the law. Advertising, you know, that is just keep track of where you're putting your money, and you need to somehow keep track of, is it working for me? So, because I'm not going to tell you to, I would never tell any of my clients to stop advertising. I would just say, let's move those dollars somewhere else that's giving you a better rate of return. A lot of people just advertise and think it's working, and they may never get a lead from it. So you got to really watch what you're doing so that you're getting the best return on investment for your dollar. But those are the 4 main categories that the IRS looks at from a tax standpoint, is those 4 areas. Now there's all kinds of deductions out there depending on your stage of life, what you're trying to achieve, but those are the main big areas. You got your dues, your SLAR, your lock boxes, you got your broker fees, your transaction coordinators, you got anybody else that does maybe some home repairs for you. The way to think about expenses is if you can honestly say when you're buying something at the store, is this going to help me bring in income? And if you can answer that question with a yes, most likely it's deductible because it's somehow used in your business. You know, you got snacks, you got your car, you got a home office deduction you can take. You have your internet, your cell phone. Clothing is only deductible if it's logoed with your company name. Okay, so if you buy Keller Williams clothes, all that is deductible. You buying a suit or some nice outfit, it is not deductible. No matter what anybody tells you, it's not deductible. They will throw that out. Dry cleaning is also not deductible. It's only deductible if you go to a conference and you stay at a hotel and you have the hotel do some dry cleaning. I told a client that once, and he would save up bags of dry cleaning for his trip, take it to the hotel and get it dry cleaned there and bring it back home. I don't recommend that, but you're more than welcome to do that. Let's see here. Your business travel, health insurance is deductible. Professional fees, all your digital stuff, and all your office supplies, computers, desks, laptops, printers, anything that you buy that is business related. Those are some of the main categories that people don't realize that are deductible. I will send over to Ginger an email, a sample list of 101 different types of real estate deductions, and then that way she can distribute that out to all of you. Any questions on deductions so far? Okay. The next topic I wanted to kind of talk about is, for you guys, is how to put more money in your pockets. I don't know, normally I do these in front of people, but I don't know how many people are actually incorporated or how many people are still just self-employed. But self-employment tax is the killer for real estate agents. Self-employment tax is 15.3%. So I'll use easy numbers. If your profit, that's your income minus your expenses, let's just say that your profit for the year is $50,000. That is what you make after all your deductions. If you're not incorporated, you're going to pay an extra $7,500. That's self-employment tax, $7,500 on that $50,000. And then you'll be taxed again at whatever income tax bracket you are. And let's just say you're at a 15% bracket there, that's another $7,500, and then your state. So now you're talking about $15,000 to $20,000 of income taxes just on that $50,000. The solution for real estate agents is to incorporate themselves, to become an LLC. In Illinois, you can become an LLC or an Inc. And you can incorporate yourself. You change your real estate license, and Keller Williams can pay your corporation directly, and it will save you, let's just use that same example. If you are incorporated and your profit's around 50 grand, it might save you around $6,000 a year after some payroll taxes. It might save you about $6,000 a year. That's big savings for someone who's making only $50,000. If we double that and make $100,000, we're talking about $10,000, $12,000, $13,000 a year in savings, real money back in your pockets. So a lot of real estate agents that are making, I always tell people, $25,000 or more in profit. That's your income minus your expenses. If you're making $25,000 or more, you might want to consider incorporating yourself, because you'll probably save on the average of $2,000 to $4,000 at that lower level. To me, that's $2,000 is a lot of money, but that's back in your pockets, and that's after paying an accountant to do your tax returns and things like that as well. You're still coming out ahead with tax savings. So I always recommend that for people who are making more than $25,000 in profit. Do I have any questions on the corporation?
Hi, Mike. Barry Schulhofer here. what is the typical cost to incorporate?
Are you in Illinois or Missouri?
Illinois
Okay.
and Missouri.
Well, where do you,
I live in Illinois.
you live in Illinois? Do you mainly, is most of your business in Illinois?
Yes.
Okay. Then you'll want to incorporate in Illinois. They'll have their own fees. I think it's just a couple $100 to do it there. And then you got to change your license over with the Illinois Real Estate Commission.
Mhm.
I don't know I can't remember what their fees are because I know Missouri's Pat, but Illinois is a little different. You might have about $400 or $500 at the most. I think it's probably less than that, but you might have $400 or $500 of fees to set it up. That's a
Okay.
one-time fee to set it up, and you're set up for the rest of your real estate career.
Sure.
Okay?
And then in Missouri, you can do the same thing, right?
Okay, Missouri has different rules than Illinois. So if you're a Missouri agent, you have to set up a PC, which stands for Professional Corporation. See, the Missouri Real Estate Commission won't let you set up an Inc. or an LLC. Okay? They're different. Every state has different rules with their real estate commissions. So if you set up in Illinois, an LLC or an Inc., well, you can't do that in Missouri, okay? Because it won't transfer your license over to Missouri. So for your situation, because you do probably sales in both, I would just do the state that you do most of your income in, incorporate there, leave your other license the way it is, and then we would do an accounting move at the end of the year to get it all into the company. Okay.
Okay. Great. Perfect.
That way
Thank
you're
you
not
very much.
setting up two different companies.
Okay. Thank you.
You're welcome. But great questions. Any other questions?
Hey, Mike, you said what entity type does Missouri license law require?
Professional corporations, PCs. If you're a broker, you can be an LLC, but if you're not a broker, you have to be a PC. Okay? But in Illinois, they'll let you do pretty much what you want. Yeah, every state's different.
Well, could you just create a PC then and run your Illinois and Missouri through it?
You can, yes.
Okay.
I always tell people whatever state they live in and whatever state they do the most business in, that's probably where they should incorporate.
Yeah, and I think it's important that they track that income separately. So I code my Illinois income separate than my Missouri income.
That is correct, yes. Yeah, because technically if you're doing business in both states, you're supposed to be paying taxes in both states. Okay. But those are great questions. Anybody else have a question? Okay.
Mike, I am going
So-
to ask one more real quick if I can.
Sure.
And as far as setting up an LLC, just LegalZoom or Rocket Lawyer or one of those can help you do the paperwork for that, correct?
Yes, sir.
Okay.
The main thing is you'll want to call the illness before you set it up and go through that process. Call your Illinois Real Estate Commission
Yes.
and make sure that you have all the paperwork that goes with that and it's all kind of in line with each other.
Okay,
'Cause
perfect.
you got, because they have to accept that corporation. Okay.
Okay.
Yeah, so if you set up an entity for us to run your commission through, we as an office send that to IDFPR and then they keep record of that. So, and of course you just give that paperwork to Lori and then we send it off to IDFPR for you.
Okay. When you set up a company, you can do retirement plans in your company. You can do a 401k. You can do a simple IRA. If you're someone that makes a lot of commissions, we can even do a defined pension, do a pension inside your corporation. It's still your money. you would want to set it up as an S corp. It's still your money. It's just all we're doing is eliminating a lot of that self-employment tax. That is really the only difference between the corporation and what you're doing today. But, you know, I've been doing this for 22 years, and I've been handling realtors for 22 years, and I have seen what people have made by making this switch. It is a big difference in your income, and you can make that money and go invest it in more real estate or something else, or help pay off some bills down the road. But it is a big change in your tax life. And all it is changing from an accounting standpoint is you have to file an extra tax return at the end of the year. That is really all you're changing for the most part with your accounting side. The other difference is when you incorporate, you actually have to become a W-2 employee of your own company. And you'll pay yourself a small salary based on, depending on where your commissions are. You know, some people that's making a lot of commissions, their salary might be a little higher. Someone who's making smaller commissions, their salary would be lower. You're still paying some money into Social Security, so that if you do retire at some point, you'll get your Social Security benefits, but we're not overpaying the Social Security, okay? But retirement plans is a big key. Other things that you can do out there is, I don't know where people are in their lives, but if you have children, you can hire your children and have them do stuff. And you can shift money down from your tax bracket to a 0% tax bracket. Again, your children have to be old enough, and they also you have to document that they are actually doing some work for you, okay? But if they are, the first $12,000 anybody makes these days is tax-free. So if you can move $10,000 to $12,000 out of your tax bracket to a child, to your 16, 17, or 18-year-old child, and get zero taxes on it, you're already giving them that money probably for movies, well, not right now, but for driving a car, doing whatever they do, you're probably already giving them a lot of that money anyway, so make them work for it a little bit. But that's a huge tax break. The other thing is they can take some of that money, put it in an IRA, and then when they go to college, if you choose to go to college, they can pull that money out of that IRA tax-free to pay for their college education, okay? So not only are you moving the money to them, getting a 0% tax break, they're putting it into a vehicle that allows them to take it out and pay their college down the road as it's making money today, okay? So those are all good things when children are involved. Is there any questions on, maybe you guys have a question about a deduction out there that maybe you didn't know if it was deductible or not deductible? Anybody have any specific questions on specific types of deductions out there that you may not be sure about?
Hey, Mike, can we cover meals again? I know, you know, if you're taking out a client, how to do that, but what about if you're doing an open house and then you're taking food there? That's 100% deductible, correct?
Correct. So when you do open houses, you know, I don't know if you do balloons, cookies, food, if you cater in the food, you know, cards, whatever you do for your open house is 100% deductible. Okay. If you're a team and you take your team out for dinner or something along those lines, that's 100% deductible. But if you have a big staff and you only take one person on your staff out, that would be a 50% deductible category. So you kind of need to separate those meals. A lot of people, entertainment, let me stress this. A few years ago, entertainment has been taken off of that list. So golf, sporting events, which none of that's happening these days, but those types of things are no longer deductible, okay? If you advertise for a golf tournament, that's still deductible, but playing in it is not deductible. But if you take someone out and you do a happy hour somewhere and you're sponsoring it and it's a bunch of people and clients, well, now that's a marketing event. That's not really a meal or entertainment. It's all how you explain it and document what you're doing. I know a lot of people that do client appreciation days, where they'll have a pop-up tent somewhere, they'll bring in food and things like that. Well, again, that is advertising. Our stance is that is advertising and not entertainment. There's been no court rulings or no cases yet on this since they changed the law. But as of today, we're still saying that that's a marketing advertising type piece. And that would be 100% deductible on those types of things. Okay. But great
Hey,
question
Mike,
on meals.
Jeb still wants to fight this whole golf thing, okay? So his question is, what if you take 8 clients golfing? Can he write this off? I feel,
It's still considered entertainment.
What's the difference between that and a client? What's the difference between that and a client event? If it's a client event on a golf course,
Because it's you're playing golf. To them, it's entertainment.
he's trying, Mike.
so I just can't play golf.
Well, you could pay for them to play and advertise a little bit, but it's still considered entertainment, and they would disallow that.
Back up. I can pay for them to play.
Well, again, that's a gray area. It would be considered entertainment. If you're giving them a client gift, a gift card to a golf course, that's one thing. But if you're actually playing at golf with them and things like that, that's not deductible.
So our local association of realtors is having a golf outing, and it costs us $100 to play in that, and it's all to raise money for charity. That is not deductible.
That is correct. What would be deductible on that would be, what is the normal golf fees? So you would
Probably,
subtract
yeah.
that from your $100 entry because the rest of it's going to a charity.
Yeah, so I think it's probably like $40 would be a regular golf fees for that location.
Then 60 of that can be considered charity.
And so it would be deducted as charity, which is not 100%. It's 28% or something?
It's only if you itemize these days.
Do you even get to write that off? Right.
Only if you itemize, yeah.
Okay.
Unless your mortgage interest and your charity is higher than $15,000 a year, you will not itemize because the standard deduction is better than that. So.
Okay. Thank you.
Okay.
But if we sponsor a hole there, $100, and they put up our sign, that's completely marketing.
To me, that's advertising.
Okay.
Mm-hmm. When's that golf tournament?
It's coming up in September. You want to play?
Maybe. Is there any other questions about expenses? Because I could talk all kinds of expenses out there, but staging, your leads, everything else. I mean, all that type of stuff is deductible. When I say internet, people don't think of their own house. Internet is deductible from your own house. Your cell phone is deductible. Your main phone line, if you have a phone line in your house, is not deductible. If you have a second line, like a fax line at your house, that line is deductible. The home office deduction, all of you should probably take. The rules are if you work 10 hours a week in your home office, it's deductible. If you're not taking it, you're missing out on a $700 to a $1,500 deduction that you can take. And it's a standard deduction out there these days.
Hey, Mike.
Not a red flag.
Question on that, though, is when we sell our personal residence, do we have to recapture that?
Great question. They changed that rule years ago. There's 2 types of deductions. If you do the long form, the answer is yes. If you take the standard deduction, then the answer is no. So most of my clients, I do the standard deduction with, because we don't want to do that long form anymore. And then that way their house is not exposed. The other thing is, the difference is if you do the long form, which you're allowed to do, it'll give you a little bigger deduction, but it's also going to be looked at by the IRS. Okay, that form. If you do the standard deduction, they're not going to question that one bit at all, especially these days because everyone's going to be working from their homes.
And then did you say internet, 100% of it would be deductible? Because mine's like $100 a month for my house.
Yes, internet, in my opinion, is 100% deductible.
Okay.
Mhm. Yes. Good question. Any other questions about the home office? Okay. Is there any other? Your E&O insurance would be deductible. Legal fees to be deductible. Home warranty, inspection fees. You know, your photographer would be deductible if you use a photographer. Just remember, if you pay anybody that's not incorporated over $600, whether you're self-employed or incorporated, you're supposed to issue them a 1099. Okay, so you need to keep track of who you pay and things like that. So if you're paying an individual, you're going to want to get their social security number at the beginning of the year, because at the end of the year, they're not going to give it to you because they don't want to claim that as taxes. Okay, so don't put yourself in a jam. Make sure you get it up front before you start paying them. Okay. The mileage rate is around 58 cents per mile. So if you're a person that drives a lot of miles, my suggestion is to stick with the mileage. If you're a person that doesn't drive a lot of miles, you might want to look into leasing a car and then get a new car every 2 years, because you might get a better tax deduction that way. So it just depends on what fits for you. That's pretty much the deductions, unless anybody has any other questions. It's a lot different not being on a Zoom call than being in person. So, but if there's any other questions, I'd be happy to help you out and assist you in setting up a company if you want to do that, or meeting with each of you one-on-one and giving you just a look at of what your situation is and giving you some advice. I don't charge for any of that. So, you know, if you want to take advantage of that service, I'll be happy to help everyone that's on this call and let them know what they should be thinking or doing. So, okay. I can give you a second opinion on last year's tax return and let you know if did you miss something? Are we not deducting everything, or is there more out there that you can be doing? Are we setting up a retirement? Because when it comes to taxes, it's not just about this business. If you're married, you have other things going on. If you have other investments, it's trying to tie everything in together so that you're developing a 5-year strategy, a 10-year strategy, an exit strategy. You know, everything that's going on, because what I'll take Ginger, for example, what I tell them might be something that I tell somebody else, because they have different goals and then what you're trying to achieve, or they have children, or you have children, or you're trying to go to college and you're planning for this. So you got to get with a tax professional that really thinks a little bit more outside the box than it's this way or the highway, because you want someone who's going to tell you, here's the pros, here's the cons, here's what I would do if it's my money. But it's never, as a tax professional, it's never our decision. It's your decision. You guys got to make these decisions on what best suits for your family. Okay. You know, talking about the opportunity zone, tax credits with your clients. So you need to try to familiarize yourself a little bit to help you sell a little bit on some of these areas as well. Okay. But unless you got any other questions, that's, I think, everything in a nutshell for today.
Everybody clear on all this? I'm joking. No. Hey, I put your phone number in the chat so everybody has it if they want to call you and set something up, Mike.
Yeah, sure. I mean, sometimes it's easier when you're one-on-one to ask a question because you don't want to ask a question in front of a big group. So I'm always here, always welcome to answer your questions. I love working with real estate agents. They have, a lot of real estate agents have problems when it comes to taxes. So I like to try to get them back on the straight and narrow path so that they can put more money in their pockets.
Is your business primarily real estate agents?
I handle right now, I think around 300 nationwide. But it's real. I have mortgage companies. I have people that flip homes. A lot of people that do rentals. I'm heavy into real estate. Yes.
That's good.
I'd say probably 60 or 70% of my business is some sort in real estate.
Awesome.
Mhm.
Awesome. Well, thank you so much for jumping on here and sharing with us today.
Not a problem. I hope you guys are all staying safe and keep that real estate market hot.
Thank you, Mike.
All right. Take care, everyone.
Thank you.